stock of the day is McDonald's. We're going to look at whether or not McDonald's is overvalued or it represents as good a value as their delicious burgers. Now, over the last 5 years, the McDonald's share price has climbed from around $180 to over $295, and that represents a return of about 60%, which is a considerable gain for a mature fast food company. But is the stock overvalued at today's share price? Well, that's what we're going to discuss. Now, how do we analyse whether or not McDonald's is overvalued or undervalued? Well, one of the best ways to determine whether a stock is overvalued is to look at its price to earnings ratio. This valuation ratio, which measures the price of a stock per every $1 of earnings, allows us to compare a company's valuation to the valuations of other companies and the market as a whole. Now, for 2024, McDonald's is expected to generate earnings per share of $12.50. This means that at its current share price of $292, the stock's forward-looking price earnings ratio is approximately 23.4. So what does this multiple tell us about the company's valuation? Well, the valuation is quite high right now. At present, the median forward-looking PE ratio across the S&P 500 index is about 17.8. So McDonald's currently trades at a considerable premium to the market. However, it is worth pointing out that McDonald's is a high quality business. Not only does it have a high return on capital, meaning it's very profitable, but it also has a strong dividend track record, over 40 consecutive annual dividend increases. So the higher valuation could be justified here. It's also worth noting that many of the company's rivals sport similar or higher price earning ratios. So for example, Domino's Pizza, 26.6, Restaurant Brands Group, which owns Burger King, 22.4, and Chipotle Mexican Grill even higher at 43.5. So looking at these earnings multiples, McDonald's isn't overvalued on a relative basis. Personally, however, I feel the multiple of 23.4 is a tad high. In my view, a price earning ratio of around 20 would be more appropriate for a stock like this. But is McDonald's a good stock to buy? From an investment perspective, McDonald's has a huge number of things going for it. For starters, the company is relatively immune to economic weakness thanks to its low prices. It attracts customers even when the economic climate and conditions are weak. As a result, it's quite a stable stock. This is illustrated by its beta of 0.74. A beta of that indicates that the stock is far less volatile than the broader market. Secondly, it has a great track record when it comes to generating shareholder wealth. Over the long term, the stock has generated strong capital gains and also paid out regular growing dividends. Given its superb dividend growth track record, it's classified as a dividend aristocrat. If you don't know what that is, just Google Good Money Guide dividend aristocrat and there's our article explainer there. Now, like any stock, however, it's not perfect. One issue to be aware of here is that revenue growth has stalled in recent years. For a company to hold on to its premium valuation, top-line growth will need to pick up. But will McDonald's rise in 2024? Well, while McDonald's has been an excellent long-term performer, it's hard to know if it will rise in 2024. On the one hand, the stock is in a strong uptrend. On the other hand, the valuation does look quite full. Many Wall Street analysts expect the stock to continue rising, however. Currently, the average price target of the 32 analysts that cover McDonald's is $325. That's about 11% above the current share price. If you want to get our latest ratings and analysis on McDonald's, go to the Good Money Guide and search McDonald's. Thanks for watching.